Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
Zoom.
Yeah, I know this is a professional podcast, very professional. What's going on, guys? Welcome to the Collecting Keys podcast. Today we are welcomed. I'm all over. Today we are joined by Sterling Chapman. He is a fellow GoBundance member with Dan and myself, and he is a savage flipper, just doing really big things down in New Orleans, right?
So, I'm in Baton Rouge, so we're about an hour away from
Baton Rouge. Yeah. That's super offensive. That's like if someone asks if I'm from Seattle.
Exactly.
I apologize.
Two totally different cities, man. Jesus.
Yeah, right. Probably different cultures. Like probably is a little bit of rivalry in some way or another. Yeah. Oh man. So anyways, thanks for listening, guys. Yeah. I'm going to sign off after that.
Man, I don't know. I'm super pumped. I don't care where you're from, Sterling. I'm excited to have you. This is going to be a good show for everybody. And I've been excited all week, as I mentioned to you about chatting with you and meeting you. So this is fun.
Awesome. Glad to be here.
Yeah, absolutely. So maybe just give us a little bit of background about you. I know you're mostly a flipper. You're doing all this. You do a lot of volume while managing a W-2. You also have your own podcast. You're also syndicating. You were just getting after it.
Yeah.
And the scale of things that you do is extremely impressive. And I thought it would be awesome to just sort of hear your story behind that.
So it's weird. I never expected to be identified as a flipper. I actually was very, but if you listen to like any of the podcasts I did the first couple of years of investing, I was very much against flipping houses. I just kind of stumbled into it as it being a convenient way to get a bunch of money. My story, I started in, I wanted to be like the next CFO of the Telecom company that I was working at. And I just wanted to like that's how I grew up. Like, my dad was worked for a big company, and he wore a suit to work every day, and he always traveled, and I always like kind of glamorized that in my head as to what success looked like. And I wanted to be one of those guys. And in 2017, I was getting my MBA. I went to LSU for finance, and I went back to LSU Shreveport online for my MBA years later. And I took some entrepreneurship classes, and I took some leadership classes. And I was like, man, this is cool. I would like to, I'd love to do my own thing, but I didn't know how to do anything. Like I wasn't like skilled in any particular like niche. Like I didn't know how to build cars or widgets or any. I was in telecom. I barely even knew how like switches worked. Like I was a sales guy, and that was it. And so around that time, it was like kind of a lot of things that happened at once. I was getting promoted and moving up pretty fast, mostly just because of my sales and networking skills. And I was really already into like a lot of the personal development stuff, not the Rich Dad Poor, but the Think and Grow Rich and all of that, mindset development stuff. And it was helpful along the way with the sales and the networking. And so I was moving up pretty quickly, and I'd gotten to this spot where I was making six figures for the first time ever. And I was all excited, and I went to go tell my dad, and I was like, he was like, look, you gotta figure out how to do something smart with your money, because, I've known all these guys over the years that made a bunch of money and then lost it, and then they look dumber than if they never made it in the first place. Yeah. So I was like, all right, I'll start reading personal finance books. And I started with Dave Ramsey, and I wasn't even engaged at the time. I had a girlfriend at the time that I lived with, and I was like, look, we're never going to get any credit card debt. We're going to pay everything with cash, and we're going to save up. And she was like, yeah, I mean, whatever. And then a week later, I read Rich Dad Poor. I was like, scratch that. We're going to get as much debt as we can. Shoot. I don't care what you do, Yeah.
So, you hadn't even gotten the money envelopes out yet.
Ditch
the whole thing.
And so at the same time, my boss, who had been with the company for like 15 years and had like a tremendous amount of success, went on all these award trips and everything. They had asked him the year before to take over a suffering market and bring it up. And then like right kind of in the middle of that project, they decided, they hire consultants every other year, and they say, hey, you need to lean up. Hey, you need to hire more people. Hey, you need to lean up. Mm-hmm. So every time they go through this exercise, a bunch of people lose their job. So they looked, some guys in corporate who had never met this dude, looked at a spreadsheet and go, oh, well, he's in the bottom quartile. He no longer has a job, after dedicating his entire soul to this company for all these years.
Right.
And I was like, I live in South Louisiana where we don't have the best school system. You got to send your kids to private schools. And I was about to buy a house and get married. And I pictured myself being like in my early 40s, having dedicated my soul to this corporate monster and have 2 kids in private school and 2 car mortgages and 2 car notes and a mortgage, and the corporate faucet just shutting off on me. And like, that's the kind of shit that makes people like kill themselves. Like that is like, that's the shit they talk about in movies. You know what I mean? And I was like, fuck no, I don't want to be in that spot ever. Like, I don't ever want to be in that spot. So I got to figure something out. So I read Rich Dad Poor Dad, and they were like, obviously it's not a real estate book, but it's got a lot of real estate stuff in it. And so, to a buddy who referred me on to Bigger Pockets, and at the time I was training for triathlon, so I was like always running and always biking, and so I just had an immense amount of time to like consume content. So I must have listened to 200 episodes of Bigger Pockets. I listened to every audiobook they came out with.
Are you losing the audio there, Dan?
What does that mean?
Sorry, let's cut you back. We'll cut this out. I think when you bumped your mic, you might have jiggled the thing because the audio is bumping in and out.
Hello.
That's way better.
That's better.
Okay.
Yeah. Sorry about that. We'll just edit that bit out.
What was I saying?
What was the last bit you heard? Dan?
Talking about triathlons, running, and
so at the time I was again. You can't hear me?
I think you're good.
Hello. Testing. Is there a problem?
No, I think we're good. Go on about triathlons.
Yeah, so I was running and biking a lot because of the triathlon training. It's like a ton of time to consume content. So I listened to every Bigger Pocket episode. I listened to every audiobook they wrote, and I just for 6 months I just seed real estate. And then I saved up and I bought back-to-back properties. I saved up, put $14,000 down on the first one and like $15,000 on the one, and then I was broke. And I was cash flowing, like, I don't know if y'all can, cash flowing, air quotes, because we got some small screens, $500 a month on one and $600 a month on the other. Now, that's before I really took in consideration repair and vacancies and $8,000 sewer that I had to jackhammer the slab to get to, but anyway, regardless, I was out of money, and so it was going to take me a year to save up to get another one. And I started reading these books about creative finance and about like borrowing other people's money and using seller financing and everything. And so my first like big project was I found these 2 duplexes. They were side by side. One had been flooded. The other one had just been trashed by tenants. And I got them locked up from a wholesaler. I went to a buddy of mine who had experience flipping, because at the time I'd never fixed anything. I couldn't hang a door up, and I didn't have any investors. I didn't have any track record. And I went to my buddy and I said, you flip houses, you know how to manage construction, you got investors, use your investors' money, buy these duplexes I got, and have them, and I will do a cash out refinance, and I'll pay your investors, and then I'll give you $50,000. And he was like, okay. And I didn't sleep for 6 months, and it worked.
Right. See, that's how the first one always is, though, when you're going through that. I mean, I think the sleepless nights on the first deal is probably the most relatable thing to anyone that
it was so bad. It was so bad because it drug out forever, and like his investors, who I knew them too, that was scary to let them down. And then that still wasn't enough. So I like talked my brother into putting cash in. So like I just all this like human capital risk of like using everybody's money and everything, and it was just it was terrible. We bought it for $190. It appraised for $390. We put $60 into the rehab. I paid my buddy $50,000, And
those are awesome numbers.
yeah, I walked away with 78 grand in equity and a couple $1,000s a month cash flow. So it was
Nice.
great proof of concept for me and for everybody around me, which was cool because, that was when people wanted to start investing with me. And so I bought a series of like duplexes and fourplexes through seller financing and partnerships. And then in the beginning of 2020, I started like fixing up properties, like going hard on the burrs. And so I'd borrow money and fix them up and then refinance them and just keep collecting them. And so I did a bunch of those over the last couple of years. And then my investment thesis was always to hold everything forever. And I was never going to, I wanted financial freedom. I didn't want another job. And so I didn't want to flip houses. I didn't like the risk, the short-term risk associated with flipping houses. I'd always kind of felt like that's what got everybody burned in '08 was having all this like short-term bridge debt with these like high value houses that like couldn't cash flow. So I was always like super against it. And then, as I stumbled into 2022, it was like, well, I have all these guys. I've had the same guys doing all of my rehab, like just doing my jobs for years now. And so like they can rehab fast and they can rehab good. So and then I had the deal flow as well. So I'm like, why am I passing up these other houses? Like, because the part of the story I skipped is in 2019, I got into the large multifamily space and started, going after apartment complexes. And that's an expensive hobby because, you got to put $100,000, $200,000 deposits down. You've got all these due diligence costs. You've got all these marketing costs. And then you have to invest along with your investors. So you're writing $100,000 check every time you buy a project, even if you raise most of the money. So, I was like, I'll just flip houses, and I still keep some of them. But this year I'm flipping a bunch of houses to move that cash over to apartment complexes. And then, and also, to quit my job, I want a big pile of cash, and that's just a security blanket. And I had the infrastructure in place. So I have a local meetup. I have a list of wholesalers that send me, houses constantly. So I might as well. That's kind of how it evolved into being called a flipper, which I wouldn't call myself at all, even though I happen to be currently flipping a bunch of houses.
Yeah.
Yep. Yeah.
Nice. So just to go back, you were buying all those deals on seller finance. I always think that's fascinating because I think that's going to be extremely common and a really good tactic to be buying good deals, especially going into the future here where prices are high, rates are high. Did you negotiate those, or did you have someone that was like negotiating?
No, so that was actually a terrible idea. Not that it's always a terrible idea for everyone. For me, so it was actually the guy that I bought him from, and he was. I don't have a bad thing to say about him. He was straightforward with what it was. But, as a new investor who just wanted units, and especially somebody who was like trying to build a brand around raising capital and just creating a presence, it's like more like a long-term versus like a short-term like deal analysis thing. So I bought these duplexes and these fourplexes that were 80 years old and in a dilapidated area for like, some of them with nothing down, some of them with like 10% down, some of them with 20%, and I had a partner. But there was a ton of deferred maintenance. And so like, I didn't put anything down when I bought them in 2019, but in 2022, I'd probably dropped $150K just like putting shit back together. Like it's like,
tough. Yeah, right.
It's like, it's either going to fall down or you're going to put 60 grand in it, and I'm, and I probably paid over market, you know what I mean? So they cash flowed until they almost fell apart, and then and now they're cash flowing again. So I mean, I'm glad I bought them, but no, to answer your question, I want to say he brought it up. Like it was just people don't realize how much benefit there is to the seller on the seller finance side. He was in his 70s. He had been collecting these properties for 40 years, just 1031ing them up, had this huge pending tax liability. Didn't have anything necessarily to do with the money because the market was topped out. He wasn't going to be going and getting any other good deals, and didn't really want to do any more work anymore either. So to give it, to sell it to me at a premium, and guarantee 6% on that money, and guarantee his income, and mitigate his tax burden by stretching it out. It was his idea. I mean, I loved it. It was great for me being an investor. I had no money, looking to make a name for myself and stack units. But for him, it was gold.
Yeah, you made a couple of good points. Yeah. One is looking to stack units or numbers, because it is a vanity metric. How many units you have, right?
Don't get me started on the fucking thing, dude. I walk up to people at conferences all the time. Like, I got 600 units. I'm like, oh, really? Tell me about it. And it's like, well, I raised $150,000 for this guy's 400 unit, and
yeah, exactly.
Exactly. Invested 50 in this guy's 200 unit. I'm like, what the fuck are you talking about right now?
Exactly.
And people throw it away.
But dude, the other point too is the deferred maintenance issue on seller financing, because seller financing is a great deal, but you're not burning your money. If you're not burning your money, then it's tough.
I'll say this about that. At the time, they cash flowed. At the time, I did not have money to fix them up, and I knew they were in bad shape. Mm-hmm. But I also knew that I would have money later on. And when later on came along, I had money to fix them up. So it worked out. Yeah. It wasn't fun taking the medicine that I knew I had to take, that I signed up for. You know what I mean? I do that all the time. And I'm like, oh, I'll just take control of the asset, and I'll pay for it down the road. And then the road gets here, and I'm like, damn it. I can't, but I mean, that's what I signed up for. You know what I mean?
Yep.
So it is, but from a from stacking units, from the conversation about stacking units, I have a couple. This is a hot button issue. So first of all, let me say that my personal intention was to create a brand and create credibility and get attention and build up myself in the marketplace. So I wanted to have a bunch of properties to gain that experience and to show people that bunch of properties, but they were all mine. There was no, you know what I mean? There's no, I'm not investing 50 grand in Joe Fairless's 400 unit, going around saying I have 400 units. I was out there in the streets managing all these damn properties. Yep. So my credibility, was validated in my perception. I got, so I'm in the apartment syndication world where I'm very entrenched. There's this obsession with number of doors, and it's a stupid vanity metric that makes no sense, because a lot of times people do that. And I've had this really prominent, I'm not going to say his name, this really prominent guy, educator, guru in the community, that he's been on my show twice, and I wanted to be on his show. And he was like, well, yeah, email me. Just send me back. And she was like, well, how many units do you have? And I was like, well, I've got all these, my single families and my small multifamilies in Baton Rouge. I've got a 70 unit here. I've got a 54 unit here. I've got a 45 unit here. And, working on a 350 unit. And they were like, yeah, well, we want to see somebody with more units. So, hit us back after you close the 350 unit. But my ownership equity position in that 54 unit is 5 times what my ownership equity portion in that 350 unit is. You know what I mean? And I know people that have been on that show that I got 1,200 units, and the value of your ownership interest in that 1,200 units is $170,000. So get out of here with that. That's such garbage.
Totally.
And look, everybody wants to market themselves, and that's fine. But you got to have some integrity about it. You know what I mean?
Totally.
I just don't want to be caught. I think my worst nightmare.
Yeah. I mean, it's always such a funny thing. Yeah. Oh, sorry. Just fucking delay again. That is always such a funny thing, though, with how people peacock with stuff like that. I mean, the units is such a big one that you see and I mean, even like guys in GoBundance, or like things like that, where guys are doing well, but they feel like that's where they're going to get their credibility, or I always laugh too when like at the lower sort of tier of that, like the financial freedom folks, they're like, oh, I replaced my income with like one Airbnb. It's like, yeah, but you were working part-time as like a dog babysitter.
Dude,
the income you had to replace was like
exactly.
$1,500 a month.
Check this
Like
out.
that's not that big.
I was in the GoBundance folks might have something to say about this, but the non-GoBundance folks that listen to your show probably have no idea what we're talking about. I was with some of the Go Bros in New Orleans the other week. Like 5 of us, we were just having a local meetup, and one of them was going through their one sheet, and they took money out for a HELOC, and they put that in their horizontal income, like that they access money from the HELOC, and I was like, "What are you doing? Like that is not passive income. That's like what are you talking about? Like no, that's how they told me to do." And so somebody out there preaching that message saying like that's, and I'm just that, like you don't. I mean, this dude's smart. I mean, he's a doctor. He makes $600,000 a year. He's way better. You know what I mean? I'm not trying to knock the dude, but he was like somebody in the system had coached him into that. Yeah. And I'm like, well, let me tell you how income statements balance sheet work. That ain't right.
Right. Exactly. Yep.
Yeah. Right. I feel like people like that tend to be the most guilty of it as well, because they're obviously highly educated, and they make a lot of money. And, I think that, I think especially high earners like that don't really have a lot of freedom. They try to get that credibility with their life.
I guess
through
so.
Things like
yeah,
that.
it's weird.
They're really inclined to like fluff their numbers and like appear more interesting to people. It's like, because if you're a doctor, you're expected to be rich. But if you're like a person that like created this business that allows you to have a lot of money and a lot of freedom, that's way more interesting than like, oh, you're just a doctor.
No. I
look good on the doctor
because
sure,
he might listen to
but
this,
you're not going to be the
he's an
coolest
awesome
person
dude,
at a party.
I certainly do not want to suggest that I was knocking him in any way. Somebody told him to do that. You know what I mean? Like his doctorate's in medicine, not finance. Like he was coached that behavior.
Right.
I want to know who told him to do that.
Yeah, exactly. Me too. Yeah. Yeah. I got a question. I want to kind of go backwards. Because you mentioned, so you're working a W-2 job, which is impressive. That I'm kind of in the same boat as you. Work a W-2 job, run this full-time business, and you got you're burring and flipping, and you said you had guys like a crew. How did you manage? And I'm assuming they worked for you full time through this process. Like, how did you manage a W-2 plus all the other business stuff you do, and then managing this crew? Is it just you had a great lead foreman, or what were you doing? Maybe explain some of that experience you had.
Yeah. So, I mean, I was really lucky early on. I had, a foreman that ran all the materials and kind of wrangled all the guys. So that was very helpful. And then I have some office guys here. I'm real big at building systems to like kind of like, you know what I mean? Minimize the amount of things that I have to touch. Mm-hmm. And so, when it comes to my day job and managing the sales folks, you know what I mean? Like I have the controls of like, hey, hit me between this time and this time. This is the things I'll handle and go to, I'll set up like, these are all the places you can go to solve your problem before I'm engaged type of thing. And then on the real estate side, like I'm trying, and this isn't always the case, but I'm trying to boil it down to where I really only spend my time doing 2 things. And that's deal flow on the single family side and capital raising on the multifamily side. Mm-hmm. So like with Crestworth Capital in the syndication business, I have partners with Clearbay Capital that and we meet 3 times a week, and we go over all the asset management things, and we all vote, and we all make those decisions, and we all go back and forth. But like on the day to day, there's one guy that focuses majority of his energies on acquisition. Another guy focuses a majority of his energies on underwriting. Another guy who focuses a majority of his energies on asset management, and I focus a majority of my energy on like capital raising and building out the capital and raising infrastructure. And so that allows me, like, like I've gotten insecure about certain areas where I'd like to be better at finance. I'd like to be better at construction. I'd like to be better at this. But like through all the people that I've interviewed that have really gone far, they've really like tripled down on their strengths and like built solid partnerships with I feel like I'm going to get a lot further with these three guys, with all of us like really tripling down on our strengths versus any one of us would, like trying to juggle all those hats. With the single family side, I've got third party property management, that manages all the properties. I've got the foreman running the materials and organizing all the guys and scheduling all the, construction. I've got my assistant, my office guy, my operations manager coordinating it all, ordering the materials that they don't order, the stuff that needs to be, ordered long distance, getting the utilities set up, getting the dumpsters coordinated, and all that kind of stuff. I use a realtor to sell them. You know what I mean? He does more work than a regular realtor because he sells 30 houses a year for me, and so, really the things that I lean on myself to do that I don't feel like I can outsource is the relationship. So like, I get so many single family houses, so many distressed properties from wholesalers, from the brand I build, from the relationship I have with the wholesalers. And they see me on Facebook closing every week. And so they know, like, Sterling can close. He closes every week. There's no bullshit there. Like, and so that's why they send it to me, And then with the investors, like, I can hire people, but like, it's hard to train somebody to really intimately understand how, everything if you've dedicated your life to studying something, like I have for a half a decade, it's kind of hard to like train an employee on that topic in 6 weeks to the comfort level to like, you're going to be interacting with an investor that we want to write us a $200,000 check. Like, I don't want to hand that over. Like, I've got a marketing director that sends the bulk emails, you know what I mean? And does some of that stuff. But as far as like the conversations with investors, I like to handle that myself.
Yeah. Awesome. Yeah. I think there's so much to be said with that too, of that relationship piece. And you're completely right. Like, especially if that's sort of your strength of personality and role, and you establish with people that you can be that closer or like, that in person, you're going to have so many opportunities, like, because we're mostly wholesalers. We do some flips, but we're for the most part wholesale and rentals. And tell you what, if there's like a strong buyer that we know they're going to close
every time,
they're absolutely going to get our best deals because we know they're not going to every time. Dan, he does our dispo, and Dan even has in his phone, he has a little note next to everyone if they're a pussy buyer or they're a strong buyer. That way we know that if they call on the deal, is it worth answering the phone or not?
Dude, I never fully understood the importance of a strong buyer until I started flipping houses, and like. Dude, that's crucial because like there's constant cash flow issues, right? Because you pay everybody now and then you don't get paid for 4 months. So you really need these houses to close when they're supposed to close. And if you get somebody that locks up your house and takes it off the market for 45 days and then doesn't show up with the down payment on the last day, and you're expecting a $112,000 check, and instead you get like another 45-day lead time, if you're lucky, because at that point everybody wants to know why it's been on the market for 45 days.
Totally.
Dude, that's terrible.
It's so terrible. It's so stressful. I mean, we've literally had periods of time where we're rolling into the first of the month and we're like, shit, we're not going to make payroll because like some stuff got delayed or things like that.
All the time.
Yeah. And then 2 weeks later, we have $300,000, $400,000.
We've tried to forecast it, but to your point, things fall out of escrow. You can't predict some of the shit you deal with.
You just can't.
It's cash flow forecasting. It's a hard concept. And it's hard for multi-billion-dollar businesses and people that don't run a business and don't have payroll and don't have inventory. They don't understand. Like they see you're doing well. They know you're worth like on paper millions of dollars. They just assume that like you're sitting with a big fat stack of cash in the bank, and it's like very rarely the truth.
Yeah,
and like you can't explain that to anybody. Like unless you're in the thick of it.
Like, you're one of the first people we've talked to that we've interviewed, or that Mike and I have talked to that have verbalized that exact same concept. It's so challenging.
Oh man.
Exactly, because you get it.
Yeah. Well, see, that's how we know you play the game, because you're right. Most people don't understand that.
Yeah.
That's like the biggest like bullshit test. It's like, oh, how do you
Yeah.
manage
They're
your
like, what do
cash
you
flows? If
mean?
they don't have that exact
They're not doing
answer,
enough business.
then they're lying.
They're full of shit.
Wow.
Yeah.
That's cool.
Exactly. Yeah.
So right on. I love it. Well, if you're cool, we typically go for about 45-ish minutes. I have some ending questions, but before we do that,
Sure.
I'd love to kind of just hear about, if you're open to sharing, some of the numbers, like what your portfolio looks like, what sort of, how many flips you're doing, what your typical revenue is per flip or per year. I think it's just always good context for people, for someone that's doing something as large of an operation as you, like,
Sure.
how much can you actually make if you put that together?
Yeah. So it's hard to track because of it's moving so much, and I'm paying accountants a ton of money to get me answers to those questions. But I'll tell you from an equity perspective on the BRRRRs, I built up about $1.5 million in equity in the 2 years that I was buying and renovating houses. And from a cash flow perspective, that the cash flow has been a very difficult thing for me to understand as an investor, because so when I first started out, when I had like 26 houses and I managed them personally, they were good, right? And not that I was the great manager, but like I was really, it was my shit. And I was like Johnny on the spot. And I was showing up to get leases signed at 7 p.m. on a Friday or 10 a.m. on a Saturday morning. And like, they were always full. And then when I went and outsourced management, it's kind of been tumultuous with the outsourcing of the management. I'm on my second manager now. And what's my fault in the situation is that I keep buying houses and I'll rehab them to like 95% of the way done, and I'll give them to my property manager. I'm like, here, fill it. He's like, okay, well, it needs another $5,000 before I can fill it. And I'm like, all right, we'll just take care of it. And then he puts that $5,000 on my expense line.
Totally.
You know what I mean? Instead of in the CapEx area where it belongs. So then I get my statement, then I get my deposit from him. I'm like, what the hell? Like, he's like, well, what the hell? You know what I mean? Like, you did this. like we're at good occupancy. So the way, like in a perfect market, I should be collecting $56,000 a month in rent. Wow. And my principal, taxes, and insurance should be around $35,000. So, that spread right there is $20,000. Now, there's different ways you can adjust and forecast, and we're up some months down, and we're down some months. There's different allotments you could for. I pay 6% for property management, and I allot 7% for vacancy and 7% for repairs. Like I said, it varies. But in a perfect world, when it averages out, it should be about $8,000 a month from the rental portfolio.
Gotcha. And across how many units is that? I'm just curious. I'm thinking of like the difference in value of properties from where you're at versus where we're at, because our numbers are extremely similar in terms of like gross
70.
Cash flow.
Yeah, 70. Yeah.
Interesting. That's so crazy. So cause we're in an expensive market. So our portfolio is about half the size of yours. Right. And our cash flows are almost identical. So our gross, if everything's ideal, is about 53 and a half.
Nice.
But we have half the number of units, and then our equity is about double, just because they're, $300,000, $400,000 properties.
Sure.
Right.
And I'm sure they've skyrocketed
and buying them
as well.
Which has helped a lot for sure.
And I said, like, and that equity, I say that equity, that $1.5 million in equity was like the value that was created like upon like completion a year and a half ago. Right. So, I mean, there's another $1 million in equity in like the houses that I'm working on this year. And then God knows how much those have appreciated since I bought them. So, as far as the flips go, so far this year, I've sold 5, and 3 of them were over 100K spread. Wow. And then two of them, one of them was like 50 and one of them was 80. I do have one right now that I might end up like barely making anything off of. I was looking at the numbers and it just I made some bad decisions in it. Like we had this like we had this garage, and I was like, oh, let's do a mother-in-law suite. And dude, it was just a terrible idea. And like, I was like looking at the numbers, the materials and the rehab costs stack up. I'm like, dude, we're not going to lose money, but we ain't gonna make shit off of this house, you know? And that's the first time that's happened where we're like, you know, really had like a not home run.
Yeah.
We've got
welcome to the show. I think it happens to everyone after a while. That means you're doing enough business.
They're usually between about 50 and 100K. You know, nice. I usually underwrite. You know, the ones I make 100 on, I think I'm going to make 150, and the ones I make 50 on, I think I'm going to make 75. So like, I'm by no means a scientist here. Like, I just like, you know what I mean? Make sure I have a big enough margin to screw up.
That's kind of how we've picked our flips, right? Like, you know, because we're not at the scale you are on our flips, and we've never really wanted to be flippers, but it's like, there's some fat margins here. Like, let's keep our contractor busy because he does our burrs too.
Yeah. I've got right now 3 on the market. Like I said, I've already sold 5. I've got another 5 or 6 I'm working on that should be ready in the next month or so. And then I've got another 2 under contract. I think I think the last tally, and I didn't add that up, or maybe I missed that. I think the tally is like based off of what I've sold and what I've got under contract. I should be like at 17 flips this year. Nice. Now, assuming, and I'm assuming that I'll get
before the end of the year
another 10.
Okay.
But I'll tell you I'll tell you, I'm getting nervous. The market is not like, it's not treating me like, you know, and it's so funny because in the spirit of transparency. So I'm like big in the camp of like, oh dude, we got supply issue. You know, we got demand issue, like over demand, under supply, and then we got supply. And I've been carrying that torch and preaching that, but I can tell you, from the streets, the way it feels is I'm not getting 10 offers on day one like I used to.
And I don't know if that's a temporary thing. Is that a 6-month rates? Yeah. Rates have been going up and people are scared and they're going to calm down. I mean, you look at jobs report as of the recording of this podcast came out super strong from what I'm hearing. And so it's like, are we in a recession? Or are we not? And then maybe by Q4, we'll be back to where we were. Like, we may not as incredibly hot, but maybe people will be buying again. I don't know.
So it's all about perception, right? So people have been told by everyone that it's really expensive. And with the interest rates, you know, the monthly payment that people have to pick up is very high, but people are starting to game the system. And, you know, most human beings, people that aren't like us, that aren't like, you know, making good money, that don't have like these income opportunities, they have a fixed income for most of their life, whether they're, you know, salary job, even if it's a good job, they have a ceiling. So they live their entire life off of a monthly budget. Right. Yeah. Most people don't think like long term. They're like, can I afford this on the money that I make for my salary? And when all of a sudden to afford that same house, that monthly payment is so much higher, it reduces the pool. But where people have started to play with this, I'm sure you guys might have seen this on some listings where you have like a $450,000 house, but they're saying, hey, so the seller will contribute $20,000 towards your loan cost.
So they're still able to go high on the price, but then,
right. And that's genius. Exactly. And that's genius because for that same house to appeal to that same buyer, instead of being $450,000, it would have to be like $350,000. So sure, the seller's giving up $20,000, but they're also making $100,000 more on the spread. So who really cares? Because they're still going to be coming out significantly further.
So as a seller of flips, I can pay.
Yeah, and it depends on their
rate.
Absolutely, you can.
I mean, I can pay towards closing costs, and that's where the points go. So that makes perfect sense. Yeah. I just never thought.
Yeah, and hey, there's just so you know, there's some like practice. Talk to your realtor and your lender that you use, because there's some limits depending on the loans and the size of down payment. But you can totally sure. To me, it's another way of creative financing, but it's also to keep your momentum going, because like we're in a.
That's great. And it's nothing revolutionary.
Exactly.
It's just a spin on a common practice. I'm already putting money towards their closing costs, but if we market it
and so
that
now
way.
if you bring them down, you got to think about your customer, right? Your customer is a buyer, and the average customer, they live their entire life off of their monthly income and their monthly expenses. And so you just got to trigger your just sort of position your product to meet that need that they have, because those people do not have any upside. They're never going to be able to afford a house with these interest rates. So just basically make it so they can afford your house.
It's always about the monthly budget.
Making it affordable for them on their monthly budget.
That's great.
That's
great. That's awesome. I love it.
So, So, especially because, it used to be like a down payment was a limiter, but now you can buy a house with 3% down. So you can buy $1 million house with 30 grand.
Yeah.
And if they contribute $55,000 to your loan cost to bring your monthly payment down to what it needs to be, who cares? They still made $1 million on their house.
Yeah.
So cool. Well, that's awesome. Yeah. So you got all that. And then you got the syndications too. If you wanted to touch on those really quick, I'd love to just hear about what you have going on there. I don't know how you're doing for time.
Yeah. I'm about to have to roll, but on the syndications. So that was, I guess in late 2019, I was managing at the time I had 26 properties. And I had a newborn baby, and I had a day job, and I was like running around collecting rent and like trying to fix shit. And I didn't know how to fix shit. And like I'd get in fights with tenants and then fighting with my wife about getting in fights with tenants and then going to fix shit in the middle of the night. And I was like, this is just miserable. I'd rather
you're my soulmate on this. You're my soulmate, like
and
babies
it's not scalable.
And wives and stress and everything, dude.
It's just not scalable. So that's when I read Joe Fairless's book on apartment syndication, and and they talk about a thought leadership platform and all of that, and that's when I started my podcast, which you were just on, Mike, and so I just but it was hard. It's been between 2019 and 2022 is just a hard time to buy anything really, right? It was the top of the market. Boom of competition. So we didn't get our first project under contract until the end of 2020, and we closed on a 54 unit in Noonan, Georgia, in February 2021, and then a 70 unit in Rock Hill, South Carolina, which is like the Charlotte MSA, in February 2022, and then I just helped work with another group, Elevate, that on a 350 unit in Houston, and then my core group is doing another deal that we're closing on next month as well. So it's going good. It's one of those things that is like a long game, right? You don't get a huge. I've seen, back to our kind of bullshit meter earlier, I've seen these syndicators that are the syndication educators. I saw one at a conference recently. He goes, look, you can quit your job from buying apartment complexes. And I was like, that's weird, because I've bought a bunch of apartment complexes and didn't find that to be the case. And he was like, no, when you buy them, he charges acquisition fee, and that acquisition fee can replace your income. And I'm like, well, not really. Like, that acquisition fee can replace your income like this year. You know what I mean? But like, what if you don't get another deal? Like let's stop calling shit passive income when it's not passive income. You know what I mean? Like, it's like flipping house. I never wanted to quit my job to flip houses. Like, I wanted passive income to replace my job. Like, what if I don't get another deal? Like, what if the market shifts and then I gave up my job? And so the problem I have with living off of acquisition fees is it incentivizes 100%. You to buy a bad deal, because you're just chasing that acquisition fee. Like, I don't need an acquisition fee. I don't even know what our acquisition fees are. They're very small, and we usually just roll them into the project. But if you're out there like training an army of people to like live off of their acquisition fees, you're training them to find bad deals that were going to hurt their investors, because you just need that.
And those acquisition fees have also, there's like acquisition fee creep, right? I feel like they used to be 1%, now they're 2%, and like 3% exactly, and it's like 3% to buy an okay deal from and they picked up the phone and talked to a broker that had a deal. There's no work or effort in that to earn that.
Well,
Yeah.
there's a lot that goes into putting together a project, but there's a lot. There is. I mean, like I said, it took us 2 years to get our first deal, and it took us a year to get another one. And there's a ton of marketing and you know what I mean, time and energy to get a good deal, right? And I mean, I think your example was of like any Yahoo who's going to buy any deal, you know what I mean, and then charge an acquisition fee. But like we're ultra conservative, so like
which would
it takes
justify
a long time to find a good deal. You know, you can go buy. I mean, there's a million deals trends, right?
Well, the thing is, to the uninitiated, like a fat check is just so unbearably sexy.
Yeah.
You know, like to someone that makes $100,000 a year, the thought of being able to get that all at once is such an incredible draw to people. I mean, even when we started wholesaling, I always remember the first check that we got over $20,000.
Just so
I chose to not get it wired. I went and picked up the check just so I could hold it. You know, right? It's just stupid, right? But like we've never had that before. It's crazy. And then, you know, I think the perfect way that sort of represents the current market that I view with syndications, multifamily. Ken McElroy was on a podcast not too long ago. He talked about how they finished up the stabilization of a property, like it was fully, you know, fixed up, ready to sell. They listed it to sell. They found a buyer, and then he ended up getting an email from the buyer for raising money for a value add
that he was selling to him.
He had already finished adding the value to, and had sold. Yeah, he was selling it to them, great. And he was on the email list for the guy that was raising the money. So, but anyway, cool. Well, I know you need to bounce here really quick. I just have one question that I wanted to ask you that I always like to ask people. You have time for it. What is your craziest real estate investing story that you're willing to share on this podcast? And this can be anything, like, you know, like we have friends that have found bags full of homemade sex toys. Like, you know, we found a coffin that was full of old porn, you know, that had a dead cat at the bottom of it. How those things are related, I have no idea. Like, what's the crazy story you got about a tenant, property, project, whatever?
I got out of property management as soon as I could. So I don't have a ton of them. I mean, the tenant that got me out of property management, I'll tell you that, dude. I should have known this was, it should have been a red flag. She paid me 3 months in advance in cash. So I should have known she's either a drug dealer or a hooker. She ended up being a hooker. But so immediately it turned south. She was like super nice at the lease signing. And then like just totally coincidentally, like it was in a fourplex and she was upstairs. The next day I get like some text messages from this other lady. And it was those seller finance properties that were older and they needed work. And I just, you know, in the early days I couldn't afford it or I didn't know any better. But the lady below me texted me freaking out going, water's dripping on my ceiling. So we go in and we try and go in through, it's like 7 a.m. I haul ass over there and I knock on the door upstairs to see like why water's dripping down below it. And the lady wouldn't come to the door. I opened it and I knocked, I'm like, hey, maintenance. And she started screaming and cussing and chasing me out. So it took 2 days to be able to get in the unit. And she cussed out me and my maintenance guy and chased us off and everything and called us every name in the book. And we finally got in. It was her hot water heater was rusted out and it was dripping and it was going. So we were literally just going in there trying to replace her hot water heater. And she wouldn't let us because she'd been like,
a brothel out of your
enterprise. You know what I mean? Yeah. And so we finally, I mean, at one point we cut her water off. Like we tried everything. And we finally got it all fixed. And then, because I had to like grovel and beg. Dude, I told this lady I was going to evict her, and it was in COVID, and she laughed and she said, beep, 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 like you can't evict shit, you know, but like stuff that I'm not going to say out loud that she said to me. But I mean, it rings in my ears forever. And but basically, she was right. I couldn't evict her, and because of the COVID and everything, and so. She called me, so I had to beg and grovel this woman that I wanted to strangle. and like,
Yeah.
please,
Oh my
man,
God.
you know, let me in my own house. So then at like 9:00 at night, after we'd replaced the hot water heater, I'm laying in bed, and she calls me, and she goes, "My hot water heater doesn't work. It just sprays air." And I was like, "Well, I'll send a plumber in the morning." And I knew what it was. It just needed, the pipes just needed to fill back up because we had drained the water. And but I was so fed up with her. So she's like, "You're not gonna send somebody tonight?" And I was like, "No." She's like, "Oh," she started
Right,
bitching. I was like,
right.
"Honestly,
Yeah,
I ain't giving a
exactly.
shit to help
Oh,
you
shit.
because, you know, fuck you." And she goes, "Okay, I'll show you." And there was still like after we replaced her hot water heater that was dripping on the sheetrock for the unit below, we cut a hole in the sheetrock to stop the water from spreading. We were going to go back the next day and replace it. So there was a hole between her unit and the unit below. And she took the sink hose and just started spraying water down in the unit below. So she goes, "I'll show you." And she hung up. And then the lady below started calling me, freaking out. Yeah, so the lady below was like Honduran. She didn't even speak English. She called me, yelling at me in Spanish. I'm like, "Wait, what? What?" She's like, "Agua," you know? And so I was so mad. I was like, I went back into my bedroom because I had a little baby at home. So like the baby was like in a little thing right next to our bed, you know? And so I walked out of the bedroom to take this phone call and get in this argument. And I walked back in and tell my wife, like, "I'm going over there right now." She's like, "Don't go over there. That lady's going to shoot you." I was like, "You're right. I'm going to get my gun." She's like, "Don't bring your gun. You're going to shoot her." The next day at like 5 a.m., I woke my buddy who managed properties up. I was like, "You take him or somebody else." He busted out laughing. He's like, "You didn't sleep much last night, did you?"
That's a
So that was how I got out of property management.
You really can't.
That's a great story. Man, you can't make that stuff up. Who even thinks of that? It's going to start dumping water. Oh, my God. What a malicious person. Awesome. Well, thanks so much, Sterling. Really appreciate you coming on, and thanks so much for being patient with the technical issues. Where can people find you? And I guess, do you want people to reach out to you?
Sure.
And if so, what's a good way for them to find you? Feel free to plug your podcast.
Come check me out on the Rent Roll Radio Show on all your podcast place, or in YouTube or Instagram or Facebook. You can find me, Sterling R. Chapman, or you can email me, sterling@crestworthcapital.com. So my email is, my website's crestworthcapital.com.
Perfect. Right on. And I'll get all those from you. We'll add all those to the show notes too.
See y'all.
And thanks for listening, everybody. We appreciate it. And we'll talk to you guys next week.
Thanks.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.